You know, a couple weeks ago, we spoke to your colleague, Mark Spitznagel, who is over at Universa. He had been bullish on the market, but has been voicing more concerns.
Yes.
How do you feel about where we stand right now?
So let me qualify by saying that Universa is market blind, formally market blind, but we're humans, we have opinions about the world. And the whole idea, the Mark's sentiment was that you need a big tail hedge and you need a big position. Compensation because the market rally, allows you to have a larger position. If a tail hedge allows you to have a larger position, so that was his position. But now we have a lot of risks building up. Okay, whether the first one I think is, of course, we're starting to pay for debt, and year after year taking a larger portion of the budget. So it's not out of control yet. Europe is worse than us. When you have debt, you need to grow very fast. We're growing, but we should grow faster to be able to control that debt. That's a big thing. The second one is, and I'm really worried, if someone asked me what are the top two biggest financial mistakes made in the 21st century, one of them would be confiscation of assets by, after the Ukraine war, of people, because this kind of thing you can do once. So the United States bullied Europe to participate in confiscation of assets of all, some of relevant people, with vague links to the Russian regime. And it may make sense maybe from a justice standpoint, but you got to remember that it's not going to encourage people to invest in the system, okay? So transactions are still conducted in US dollars, but we're seeing more and more the storage in gold, and you see it in oil prices, whether the central banks and individuals, okay? People want out of that system. So I'm really afraid of a progressive loss of the role of the dollar in the global transactions.
It's interesting. The dollar fear has been a very real one for many investors, but you've seen dollar kind of supremacy still reign.
I think it reigns transaction-wise, but people conduct nominally a transaction in dollars, you exchange dollars, but they don't store it in dollars. And that is what the problem is.
It's interesting. You mentioned oil for just a moment there. With all the geopolitical risk we're seeing, particularly in the Middle East, you've seen Brent rise above $80. And where do you think it goes from here?
No, it's pricing in a small probability of a big, I would say geopolitical event, small probability. Not very high, because should that event happen, oil would be way, way above 80, as you can expect. We'd have a worse than 1973 oil crisis, because we have a more fragile, more interactive systems than 1973. So, but I think the market's pricing in justifiably a small probability of that. People are aware of that possibility, but they're not putting too much trust in such a forecast.
So you mentioned gold for a minute here. How much are you willing to be buying gold at this moment too? And do you buy it as a kind of answer to your concerns about the dollar?
I'm not a gold buyer. I would say that I'm more of a, my focus would be more on being hedged against a eventual market collapse, because we're more fragile than we were, probably at any point in the last 20 years. So if not, 30 years. We're very fragile. And also, you've got to realize that the big rally in the S&P 500 over the past 12 months is attributable to a very small number of firms linked to AI. Now, AI is probably going to be the best investment, but maybe not in these firms. In other words, they may not be representative of the growth of AI. Because remember, when the internet started, everybody used Alta Vista. They were one of the pioneers, and then we switched to Google. Okay, so in other words, some existing firms have a huge capitalization, gains in trillions, owing to the promise of AI, and someone else may come in and take the business away from them.
Yeah, you've navigated some of the most significant market moments in history, Black Monday, 2008. Yes. How do you see this moment? You talked about fragility in the market today. The market has shrugged off almost everything this year.
What happened is like these crises happen when you expect them the least, which is why people don't have any protection. They're overexposed to the market, and I think it's very similar to the environment we had in previous collapses, and the market becomes complacent. People are used to it. They may have some kind of precaution in the beginning, but then they throw precaution to the wind. You get more rally, and that's when vulnerability is going to be at its maximum.
What are the words that you would use at this juncture? Are we in a bubble? Is there still animal spirits jumping around? And what is causing it? What is causing the exuberance we're seeing in the market today?
I think that we are coming out of an environment of very low interest rates that taught people to avoid conservative investments and go into assets that can gain in value. So people are used to investing in the market, used to like investing in the market. And that was, I think, Mark Spitznagel's point, is that it's attracting more and more people and has more, the reasons they got in, are there, okay? So nothing has changed. But all you need is just a small change in perspective, you see, to expose the fragility of it. We have valuations that are crazy, built on a lot of hope, and the economy is very confusing, you see. So on one, you hear stories here and stories there. Okay, is it overheating here, or is it cooling off there? You see, so we don't have a classical environment for us to make judgments. So which is why I would say that one has to be schizophrenic, extremely bullish, while believing in a total collapse. In other words, tail risk hedging. Okay, that's Mark's point. Although I think Mark, as you said, is less bullish than he was, or maybe he's even waiting for the first shoe to drop.
Well, how does this time compare to other times in history? Another thing Mark mentioned is that we're really vulnerable to black swan events. I thought that was an interesting comment because as long as I've known you, you've been very reticent to call out black swan events.
No, but we have a fragile system. And we have more interdependence, and it was shown during COVID, between world economies. We have more globalization, almost, it's at its peak, so more dependence between economies. So in other words, if something collapses, it causes feedback loops. We have more debt in the Western world particularly debt relative to growth, than we can handle. And what's bad here is that, and it's sad is that, as you get richer, typically, you start having more debt, but your incentive to grow isn't there anymore. So we are now probably the richest we've ever been, and we've never had more debt. And it makes no sense because you have to grow out of this.
To that end on the debt market, do you think that the U.S. is going to be able to continue to issue in the way that it has? Will there be foreigners to buy U.S. debt?
That's exactly why I'm afraid. I'm afraid of what the current administration has done in 2022 when they confiscated assets. It doesn't encourage people to invest in your currency, because the first geopolitical problem, and you may be, if you're, let's say that you're a citizen of countries that are, in the Middle East or in Asia or even in Eastern Europe, you don't want to be, you don't want your money taken away from you. You see, once you do it once, you can do it once. It's not the kind of thing that you can do twice. So that is harming the dollar and harming the United States enormously. And I think President Trump mentioned that. He said we shouldn't be freezing assets.